An interesting update from CleanTech Lithium today regarding the DLE project that the company's been working forwards with or going forwards with. Here to tell us more about the latest developments, Steve Kesler.
Hi, Alistair. Yeah, no, we've been working on the DLE since the plant was commissioned earlier this year, and what we're very pleased to put out now is more detailed results that we're getting from our DLE plant and initial results from the downstream processing that we are going to be engaged with our partners in Chicago. And I think that what we've demonstrated with the DLE plant is very consistent and good performance at extracting the lithium from the brine and producing a clean, low impurity, concentrated eluate, which can then be processed to battery grade lithium carbonate. And as we've talked in previous discussions, there have been some analysts who are skeptical about DLE and its potential for going into commercial production. And what we're showing here is very, very robust results. Now, we've been running the pilot plant. We've given the results here that we've now run 1,200 cubic meters of brine through the plant for 384 hours, completing 14 cycles of absorption and desorption, and with very, very stable results. After the initial couple of cycles, we're demonstrating about 95% recovery of lithium from the brine onto the adsorbent. And then when we desorb just with pure water, we get a very high grade eluate, which is about 700 ppm. We concentrate that using reverse osmosis, and over the period we've been running the pilot plant, we're averaging just over 2,200 parts per million of lithium in that eluate with very low impurities. So we've demonstrated the stability of the project, delivering high recovery. Overall recovery is about 88% of lithium into the eluate. Again, just as a comparison, this is the 45% recovery that you get using evaporation ponds. So it demonstrates DLE is much more efficient as a process to recover lithium, and that's very, very important. We've demonstrated that the absorption capacity is very stable at about 2.8 grams per kilogram of adsorbent, proves that the resin that we've selected for our pilot plant is very effective on our brine. And now we go into the next stage. Now we've produced over this period 88 cubic meters of brine. Now we pump it into these large flexi tanks inside standard containers. There's 4 containers on their way to Chicago. One's already arrived. 2 are in transit, and 1 is waiting at the port. Our partners, Conductive Energy and Forward Water Technologies, have set up the plant for the downstream processing. We air freighted an initial 200 liters for them to test that the downstream works, and they're very, very happy with the results. They've demonstrated that from our brine, they concentrate using reverse osmosis and forward osmosis to 18,000 parts per million lithium. We've demonstrated that the impurities, the major impurities, over 99% rejection by the adsorbent. There's just traces amounts of calcium and magnesium that got through the resin, and a bit of boron. Conductive have demonstrated that they can be easily removed using ion exchange, and ending up with a very clean solution, which they then carbonate. That's adding sodium carbonate, precipitating the lithium carbonate, washing it, and we've demonstrated we make battery grade lithium carbonate more than 99.5% lithium carbonate. And clearly, now that we've got the bulk sample is there, the full pilot plant is in its final stages of assembly. And during August, we'll be running the concentrated eluate from our DLE plant through the downstream processing plant in Chicago, and start making large quantities of battery-grade lithium carbonate that we can start to introduce to potential off-takers and strategic partners. As I mentioned before, every buyer of lithium carbonate needs to test that it meets their battery grade, and in particular the impurity specifications. So they need to have extensive testing of large quantities, and we'll be able to to start that process nice and early, so that as we get on for completion of our pre-feasibility study, we can start to have substantive discussions on offtake contracts and potential strategic investment at the project level of Laguna Verde. So all in all, very, very good results. We've been putting quite comprehensive results so people can see in detail how effective the DLE process works on our brine. Then we continue with the work on the pre-feasibility study. We're working for completion at the end of the year. Clearly there'll be results coming out of the downstream processing in Chicago, which will feed into that. We're carrying on working with Montgomery & Associates to develop the reserves, which will be expected to be delivered in October this year. So by the end of the year, we're targeting a very comprehensive pre-feasibility study. So that's all the technical work that's ongoing. And as we get more results like these, we'll feed it into the market, because it gives confidence that that DLE is going to be a commercially viable means of extracting lithium from these lower grade salars in Chile.
I mean, that all sounds extremely encouraging, Steve. So what about the wider context in which you're operating here? I'm thinking particularly of the lithium price, perhaps the sort of demand for electric vehicles, or any other factors you may be considering when it comes to how profitable this operation may end up being.
Yeah, well, everybody's been looking at today's lithium price, and really it's because there was a projected very large growth rate in the take-up of electric vehicles, which required a corresponding large growth rate in new production. And when you've had two very large growth rates, often there's a bit of a mismatch. And clearly the take-up of electric vehicles hasn't grown to quite the extent as was anticipated last year. There's a bit of an oversupply in the next year or so. And most analysts are still saying, look, there's a structural deficit. Now, whether this materializes in 2027 or 2028, but definitely there is going to be a deficit of lithium, which is going to be leading to an increase in price. And we know that new projects, when most analysts look at new projects and what is the price that is going to be needed to incentivize the investment in those new projects, they're coming up with a price in the order of $20,000 to $25,000 a ton. So what it means with today's price, some companies have actually stopped production, like Core Lithium in Australia. Many others have announced they're delaying their projects or deferring capital expenditure on projects until the price improves in a couple of years' time. So it will all equilibrate at a price which will incentivize new production. So we're still using for our studies. Long term, we think $22,500 a ton is a reasonable number to be using. But of course, today's price doesn't affect us. No, we're doing our feasibility studies, and then aiming to complete our feasibility study next year, start working on strategic investment and financing package, because we're looking at coming into production, whatever it's going to be, late 2026, late 2027. So that's the time frame that we think that we can get into production, which is just about the time then the deficit should have worked its way out of the market.
And of course, there's likely to
Or the
be
excess should have worked its way out of the market.
there's likely to be sort of significant customer interest in you guys from the ESG point of view. I mean, you tick several boxes in that regard. I'm thinking of the fact that DLE is leaving less of an environmentally damaging footprint, the engagement with the local community, which you've been very concerned with, and also the fact that you know, the lithium feeds into electric vehicles, which are in themselves going to reduce the carbon emissions. So that sort of threefold ESG aspect represents another attractive point.
Yeah, and it rolls into a number of things, as we've talked about the administrative process, you know, to award the operating contract, the so-called sales. I think it's going to be very much you know, a situation where the government is very keen to reward companies, you know, like CleanTech Lithium, which is introducing, you know, a sustainable route to develop lithium production. You know, it's not like hard rock mining with its high carbon intensity, or the evaporation ponds with high water use. That we think that you know, the government will be, you know, very keen when they make their announcements in August on the process to move forward, to put, you know, CleanTech Lithium at the head of the queue, you know, for the award of operating contracts. And clearly, with the work that we've done with the local communities, they recognize that DLE is the way forward, you know, to advance lithium production in Chile. So they are very supportive of our position, you know, with the government. And as we get into discussions with off-takers and strategics, most certainly all the OEMs and battery producers in Europe are very conscious that they have to demonstrate to the EU and the governments that their you know, supply chain of materials going into their batteries comes from sustainable, low carbon you know, source. And clearly here we are, you know, producing what we call green sustainable lithium, low carbon footprint, low water footprint. It should be at the top of every procurement manager's list of materials to buy.
Indeed. So CleanTech Lithium looking very well positioned from several fronts. Steve Kesler, thanks very much for joining us.
Pleasure, Alistair. Bye.